Okay, so let's get started. So technically, we are still into the industry analysis, because how the pre-scene works in the introduction also we have seen. First it start with your role, then it gives the industry, then about a company Cewmlator. Okay, so in the industry they give us an overview, but as we discuss, the industry analysis is very small. So in order to have a better understanding, we'll have a separate session on the industry analysis. In fact, I have updated a document on the Google Drive for the same. Okay, so sometimes what happened, the facts given in the pre-scene and the real industry can be different. So you must be confused. Okay, here they have given some number, but there it's a different number. So when you're giving examples in the exam, so it's better, you can use like industry examples and you can give reference. Okay, mostly it will be very close. You don't have to give very close-ended thing. All right. So electric car market, despite their potential drawbacks, sales of EV have increased rapidly. So if you see, what was the drawbacks? We have seen previously the drawback was the charging was a problem. And what is the other drawback? Charging point was not there. The life of the charging was not that good. The cost was higher. And the demand for ICE engine still continues. Right? That was the major drawback. But still the demand is growing. However, if you compare this to ICE engine, maybe it's still the second best. So we have to look at the actual number as well. Another fact we need to remember that we are one of the top in the world. We are among the top 3. So whenever something happens to the global industry, it will have direct effect on us. If you're not an industry leader, major changes might not affect us directly. But when you are an industry leader, it affects us directly. So globally, 17 million EVs were sold in 2024. This constitutes 25% of new car sales worldwide. It's a very strong point. You can use this as a reference also in the answer. Let's say a scenario comes up. You're planning to go to a new market. You're planning to launch a new type of car. So you need to write some positive point in that. So we have just last year reference. And that to 25% of the new car sales worldwide. Obviously, some markets like China and all, they might have seen more, and other markets might have seen less, but this is the overall average. The market share of EVs varies between countries, ranging from 12 to 85%. The global EV market is valued at $250 billion. And I hope it's growing. And another thing is 12% to 85%. Okay, a quick question for all of you. Let's say we are doing a market development. Let's say we have 2 options. One option is where the EV market is 50%. Another option is where we have EV market of 20%. So which market or which country you will choose, or we should choose, and why? What will the advantage and disadvantage of going in a market where we have 50% EV, and what will the advantage where we have only 20% of the market for electric vehicles? Any point you can think of?
Going 50% EV market is when you go to the market, they easy to sell the product because the awareness of the product, the customers knows there is EV product and all the thing, easy to marketable. Then we can increase the sales. On the other hand, the disadvantage, if you think there is a lot of competitors there, the right to sell the product in the cheapest way is difficult. The cost and other things, customer behavior and the government all will affect for us.
And what is the advantage of or disadvantage of going in a small adoption market, 20%?
Goal is if we go, you can become a market leader in future. If you invest, go with the any joint venture and with the government, with the JV, you can go. You can achieve the market. You can come a monopoly, or you can. The range will be, the sales will be too much because there is only 20% is there. The market, market shares, you can achieve more.
Right. What else? Others?
I would say just on that, if we approach 20% market, like we would struggle a bit more because I think there will not be enough infrastructure, and it would be hard to convince the local governments to put in the investment for the infrastructure as well. So, like we would have massive political risk, I would imagine. Um, that's all. Yeah, that's what I can think of.
And what is the disadvantage, Gaurav, for the same thing?
That that is the disadvantage I'm talking about. Like it's political risk. We don't have enough infrastructure, being small market, so we don't have awareness. Plus, we don't have infrastructure in place. So we might need to do some lobbying with the government, or you know, push them to put in investment.
Right.
Okay.
So technically, both will have its advantage and disadvantage. However, we need to see in this business, we need infrastructure. And infrastructure will be there when we have already adopted market. But it will come at a cost because you will have a high level of competition. But I think for Cumulator being, one of the top in the world, we are good. We must be better than most of the companies in the world. So I think if we have infrastructure, we can jump in and we can play on our core competencies. Because going into the market where the adoption is only, let's say, 20% might be more riskier, because even if you're the best, people are not happy to move to EV. There is no infrastructure. So it doesn't make sense. And it's practically impossible for us to come up with all the infrastructure and, invest so much, and the returns will be so late. So going for a market development looks like one of the important topics which can be tested. All right, it is hoped that demand will be stimulated over time because of reductions in production cost. So this is actually happening. The demand is growing because of the cost is coming down. But again, how much it will be and what control we have as a manufacturer. We need to understand our supply chain also, like from lithium mining to actually the sales. After sales service is also required. We don't have a lot of service centers here. In fact, some companies like BYD, they have moved to sodium ion batteries also, because that is easy to procure. We'll discuss about that in detail in industry analysis. So we can think of it, how we can do it. One thing is clear: we are the one of the market leaders. We have to take risk. We have to invest a lot in innovation, right? Maybe we have to partner with our competitors also. For example, developments in the chemistry of EV battery packs are expected to increase the range of EVs and reduce the cost of making batteries. Now, the partnerships, as we discussed, another important stakeholder becomes a university, because we need university and experienced people, or maybe PhD people who are doing PhD. This can be beneficial for us because they are doing research and we can partner with them. Okay, if we look at a global average battery pack prices from 2022, it is constantly coming down. Now we are here, and maybe that's the actual price or something around that. Overall, it is beneficial. But the problem is, if this price is coming down, at the other hand, inflation is going up. And currently, we are living in a world where geopolitical situation is not stable. So that's the another problem we have to see. It's not always that we can pass on the benefit to the consumer. But looking on the positive side, the price is going down. At least we might not have to increase the prices. Let's say ICE car manufacturers are increasing 5%, 10% as per the inflation rate. So we can at least take care of the inflation. Will not increase the price. That itself is like a discount, right? Another thing we need to understand is companies like Tesla, they have already acquired, or they are majority shareholder in some of the mining companies, because when there will be a supply chain issue, so they will be the first one to solve that. So another opportunity for us to manage the risk is, shall we invest into the supply chain? Recently there has been trend outside industry also, what companies are doing, they are, for example, they are big business like us, so they are getting another supplier, maybe a strategic supplier, so they are investing in the strategic supplier apart from giving them business, so that they can work according to their need. So it's like somebody you own but not completely. So that way exclusivity can also come in, and especially it gives more control on the supply chain. And where you have a problem of less suppliers, or the availability of the resource is less, that can also be a good way to manage it. We need to think about that. What else can be done to reduce the prices of battery? Any ideas you guys are thinking? And do you think the cost reduction can affect the quality?
Because it's relatively new technology, there might be other ways to make batteries, other chemical production to make batteries, which might be reduced cost, but also better performance.
Right. How we can get the alternative way side? What is the best approach?
Research will be R&D, or partnering up with universities that are researching already. Or you can team up with another battery producer, share technology and research.
Right. So let's say we have few options. First is university, tying up with the university, a strategic partnership. Then partnering or investing in the suppliers who are actually battery manufacturers. And third is tying up with the other competitors who are making the EVs. So we can do a JV or strategic alliance and share our investment and risk to uh, come up with the better batteries. Which one can be suitable for our business? Which can have a better returns? Or maybe the
Uh,
less risk?
with the competitor.
You think with the
Because,
company is better?
yeah, because of the cost point of view, cost will be shared each and every month, and it's my view. And we can use the technology.
Hi, Misbah. This is Shiva.
Yeah, sure.
Misbah, maybe adding up, to higher to point something like either being relying with the competitor, or you tying up with the university, or directly dealing with the supplier. It depends, purely depends on the synergy and the strategy. If it's, there will be always a trust issue, because if you're tying up with the competitor, they always try to lead the position in the market, right? So that's the top most challenges we may have. But maybe supplier, I would say that, at currently in the short term and maybe in the middle term, it's really helpful for us, because, so we can, by supporting them for manufacturing more, we'll get at a lower cost of the battery. But in dealing with the university, that third point is we have to invest more current at this point in time. Then only we can gain more, maybe the benefit at later point in time. What do you say?
Right, makes sense.
So, Misbah, I believe I have a point of view.
Yeah, right.
So, what I think is first way to reduce the cost of the battery is you have an economy of scale that is playing, meaning you are selling a very large quantity. Probably some of it focuses on our own vehicles, and some gets pushed to the other partners. That way, we can reduce the cost. Second, the other way is obviously your costs have to reduce. Cost of goods sold has to reduce, meaning your input cost has to come down drastically. So the way to get the input cost to reduce is basically you go to the source, meaning go where the you either you in-source everything, or you outsource to the specialized agencies where you get the finished product. If you're doing in-source, you have to go to mines, and mine get a better price in the raw materials and then produce at a lower cost. Basically, the idea is bring down the cost COGS to the extent possible. Hence, your margins are higher and your battery prices will come down, obviously. So, scale up operation, economies of scale by selling more volume, or COGS has to be managed. So how do we manage? With partnership and going to the source of the material, bring down the cost.
I mean, that makes sense, Ravi. And I believe we might be doing that already, isn't it? We are such a matured company. I believe already this COGS and everything would have taken care of. Maybe there are
Uh,
opportunities to grow. And on the other hand, do you think we can have massive saving from there? Just looking at the economies of scale and working on COGS.
Yeah, because if you see globally, 50% of the EV manufacturers source their batteries from where? BYD, right?
Right.
So BYD's research in the battery and their ability to sell to and supply to other vehicle manufacturers is large. That's how they're able to bring down the cost of the batteries. And hence, the product prices are cheaper, and their cars are also cheaper. Their margins are also better.
Right. Right. But here the
And
BYD
what
is a competitor, I believe, because we are in the top 3. So BYD is our direct competitor.
definitely I believe so, because they hold more than 50% market share in terms of battery technologies. I'm sure these numbers are right.
So
And BYD sources directly. They have mines that are owned, and they source directly and they manufacture.
right, right. There can be one opportunity. It may be a little risky, but why don't we just acquire a battery manufacturer altogether? Maybe if not a very big company, a medium company, so we can have better control. And maybe going forward, we can do what BYD is doing. We can sell our batteries to other players in the market.
So what you're suggesting? You're suggesting to acquire the patent, or you're suggesting to acquire the processes or the manufacturing assets,
Maybe
meaning
the
the
entire
factory,
company who is just
entire company
whose
along
core
with the patent.
competency is making batteries. Maybe that can be a potential scenario.
Hmm. But that'll be very costly for you. You have to pay the premium to that. If somebody is successful and running very well, then obviously they'll demand for a higher cost. Doing it yourself versus paying the premium is the cost. And if
Right.
it is going to bring us the edge in terms of increasing the sales of the cars for us at a better price, then obviously it makes sense. But for the time being, when you source the fund, it leads into a interest burden for you, because you have to fund it through the additional debt instead of equity. Then it's a challenge, because any equity raising will reduce your dividend payout.
Right. So we'll discuss that again when we come to numbers. So this can be a potential scenario. Okay, and obviously the size and the volume we are working, we have to think big and we have to take a bigger risk. Otherwise, we can't retain our position of an industry leader. Okay, so when you're doing research, you guys should also find out what other competitors are doing. Okay, in industry analysis, you'll get the link of the website, or you can just get to any company's website and the report. You'll get some idea how and what they are doing.
Yeah.
Okay, now moving on. If you just look at the market share here again, most car manufacturers have long history of making ICE cars, just like us, including Cewmlator have ceased production of ICE in order to concentrate on EV. So this remains a question. Do you think we should come back to that, to the ICE cars? Maybe a probability of this question coming up in the exam is very rare, but let's say they ask you an open-ended question. How do you think, we can have a sustainable business? Maybe they give you a news article where government is trying to remove all the subsidies. They've already done it in most of the countries, but again, whatever their support they are giving, they are trying to take away that also. So does Cewmlator should consider to go back and start manufacturing ICE cars? And what are the advantages and disadvantages of that?
So
Maybe,
if you look at globally, the EV sales is around 48% of the cars sold are electronic vehicles. So, and this trend is increasing going forward. In the next 5 years, it is expected to hit maybe 60-70%. So the ICE car market share after 5 more years would be only 30%. So do we want to be in that 30%, or do we want to be 70%? That's the question to be looked at.
Or
And if
really
I
in both.
believe or not,
Sorry.
sorry.
Yeah, continue.
Yeah, so I I would suggest rather being positive and be in a area where it is less troublesome for us to be in the category of a 70% market share after 5 years, rather than being in the 30%. I'm believing that rolling back to ICE is a tough decision. I think 2020 we have moved into we shut down the ICE production. That is already 5 years past, and we have to change our manufacturing assembly line, everything. That is additional capex investment. Instead, that money can be spent on R&D of the EV.
Right. But again, that number 70%, I believe that's too optimistic. Anyways, but it's
Hmm.
positive. Yeah. But the points remain the same.
Yeah.
All right. Somebody else was adding certain points. Anybody? Okay. Right. So the global market of EV is dominated by three companies: Atom, Dilson, and Cewmlator. So we are one of them. All three focus on EVs. Atom and Cewmlator produce only BEVs. It's not just we. Other are also focusing on that. While we have Dilson producing both BEV and PHEV cars. Most of the smaller companies EVs top 10 produce a range of different types of cars, including ICE and MHEV, as well as EV. Some smaller companies manufacture. So they have given some numbers. Usually they don't give the company name in the pre-scene, but they have given specifically. But it's good to understand the percentage of the revenue. If you see, we are getting like 15.4%, and that is globally. So maybe we are just based here, and definitely we are doing sales around the world. So one scenario can come in: shall we start our own manufacturing in a new country? So that might help us to get closer to the customers. Let's say we have a neighboring country called C land or B land, which is closer to Dux land. So we might start manufacturing there. We can save cost on logistics, or maybe we can get less import due to, for example, what is happening now. Like in the US, they are motivating companies to do manufacturing here. It can create more jobs. Otherwise, higher tariffs. Even same thing in India. Any companies coming to India, let's say they are just importing a complete car, they have to pay 100%, right? On the top of that, there is another indirect taxes are there. But if they do manufacturing there, they can save on the taxes.
And I think other factors will also be contributing to that. Given already Cewmlator manufactures in 5 countries, and they manufacture in probably Eastland, and Eastland they manufacture the complete batteries, and they manufacture the motors in another country, and they assemble them in mostly in two factories. So I think looking at that, they're already quite diversified in terms of what they manufacture where. I think they're right mix. What do you suggest?
Sorry, what was the last point you said?
They are already, I feel, quite diversified. They specialize in 2 countries. One country they manufacture only the battery units. The other country they manufacture only the motors.
Right.
And remaining 3 countries they assemble everything together locally.
Right.
And having in one place, I think, provides you the economies of scale, and you can best take the mega factories. Generally, this is the trend of mega factories now. Every car manufacturer is moving into a mega factory model, where they're integrating the supply chain downward and upward.
Yes. I mean, that's possible. I was thinking from another point of view, if you have a special market where we're getting a lot of sales, specifically, let's say China. China is kind of dominating. So if you are going there, why don't we manufacture it? We already have a built infrastructure, and it can be easy for us to have a better margin because manufacturing there and you're selling there. Because logistics can have a major cost, then logistic insurance and the taxes and everything as we discussed. Import duties, tariffs, direct indirect taxes. That can also have a major impact, especially when government is taking away the subsidies. Subsidies what they're. Another reason of this market share can be to give us an idea how the other players are there. If you see after us, the next player is 6.4 and everyone is like single digit, low single digit. That means there is a major difference or a massive difference. I believe most of these companies don't have their own R&D, a proper R&D. They must be just assembling, or they might have a bigger share in the ICE engine, and now here they are having just just for the presence they want to do it, or maybe they don't have any other core competencies, or maybe some of them are own battery manufacturers, or they have their own sourcing. So maybe in terms of acquisition or a strategic alliance, a scenario can come in. But we don't have any other information, so it's just a guess.
So one other factor that I have observed, Misbah, is that the top three companies together, this Autumn and Keystone and Cewmlator together brings up about 48% market share.
Right.
That's about $250 billion is the global market size, and they bring it about $97 billion together. That's just three companies are almost owning half of the market share.
Right. It's just like Samsung and Apple. We have, they're dominating in this electronics, especially with our phone, laptops, and everything.
Yeah.
And I believe we might have some partnership with this too also. Ideally, it should be because competition happens at a lower level, but at the top, they have to, do partnership. Again, if you go back to Samsung and Apple, Samsung is providing hardware to Apple, and Apple is providing the software and other services to Samsung. Either product we buy, the revenue is being distributed to both. Though there are competitors outside, but they have a strong strategic partnership. Okay. Now, starting our role. So, for just one thing to clarify, whatever they have given in the industry, it's not obvious that we are also doing it here. Okay. So, Cewmlator or Cewmlator, you can pronounce as you wish, was established in 1952. So, 1952 and it's 2025, almost 73 to 74 years, we can say. That's a very, very long time. In fact, very few companies are able to attain their market share and be the industry leader after so many years. So that is a very big advantage. What we need to do, we need to make a SWOT analysis for our organization. Okay, so one of the strength you can put in is our experience of being so long into the industry.
Yes,
The company was quoted in Duxland. Sorry, somebody
Yeah.
mentioned.
I'm saying established organization. This is.
Yes. The company was quoted in Duxland Stock Exchange in 1968. That is normal. Usually, companies in 15 to 20 years, they go for listing. And again, what are the advantage and disadvantage of the listing play a major role. For example, in this industry especially, we need a massive amount of finance. So listing was obvious, and I believe we have been constantly raising money through the shareholders, right? And again, when we go for a new acquisition, there is a high probability that we might go for share exchange, because the requirement of funds will be heavy and going for cash might be very difficult, right? So whenever you are recommending any strategy, especially if they're testing on, let's say, evaluate the project or evaluate the acquisition, make sure you bring in this point. Okay, anything we are doing, we need to think about the finance, we need to think about the stakeholders, we need to think about the risk involved. They might not ask you directly in the exam, but you have to give an holistic answer. All of us can have a different answer or different way of looking. Some of us might recommend something very risky, others might say, we need to just continue what we are doing. Let's say managing this much market share itself is extremely difficult, so we should not take risk, and that is a perfectly correct answer. And that's what happened in the real world. If you see any well-established company, they become risk averse, they take minimum risk. However, there are some companies in our industry like Tesla, BYD, both are taking a lot of risk. So That is a difference from our industry to another. But we can still, stay to the traditional method. But make sure your answers have that holistic view in it. Then we can get good marks. Otherwise, the same thing, if you're just giving from one point of view, we can lose the advantage. Cewmlator has always focused on mid-market cars. What is mid-market cars? Something which is not very luxury, something which is not, very, very cost effective. That are attractive to drivers. Why? Because we are offering value for money. So technically, the most market, in fact, in other cars also is for value for money. However, again, this gives an opportunity. Shall we go into more luxury? Shall we go into the entry-level cars? Though we are doing it a little bit, we'll see here. The company has always been innovative in terms of introducing new technologies into its model and its manufacturing process. Sometimes this can be a question from a corporate governance point of view, because if you are constantly innovating, that means a specific number of money or specific percentage of fund every year is going for innovation, and that can definitely affect our bottom line, our profit. And remember that most of the innovation will not be successful. Therefore, small and medium companies, they don't want to invest, and if it's not successful, then it will go as an expense for that year, which is affecting the profit. That means it can also affect the remuneration of the directors. So sometime a scenario can come up on ethics that directors are thinking to reduce their investment in innovation or R&D, so that the profit is maintained and they can get a better remuneration, or at least their targets are achieved. So it can be a, yes, Devesh, you want to add something?
No, I just got a question. As we were mentioning about the code of ethics for questions like the reducing the R&D, but if they mention for achieving their own target, it would be unethic, right? But if they mention that the director wants to maintain a profit to keep it pay dividend and to look good financially, how would we direct that question? Would it be unethic or would be ethic?
Right. That's a good point, Devesh. So, yeah, how they ask also matter, but we have to understand, even if they say it is just for the profit of the company and to give for the shareholders. But remember, our first ethical responsibility is to have sustainable growth. We have to have a sustainable profit. It's not just for 1 year. If you are confident, which is difficult to say, that even if you reduce our investment in R&D or innovation, we can still continue to get a sustainable profit, then it is not unethical. Otherwise, it can be an ethical issue.
Okay, thank you.
And usually this question they might not ask directly, they will give a discussion. So you have to, create an argument. You have to talk in the favor, some points in against, let's say advantage. Then you have to give your conclusion or recommendation. All right, moving on. Cumulative drive. Cars are designed to be enjoyable and exciting to drive while ensuring the safety of its drivers and their passengers. Safety is still a very big concern on this. The incident has been reduced about that fire and everything, fire, especially that is happening with the small vehicles, or we can say like two-wheelers or scooters, but still it's there. So safety remains a very important point, and this health and safety can become a major issue for our company, internally also during the manufacturing. So that needs to be taken care of.
I have one question.
Yes, sure.
So, Misbah, are they saying that they are designing the cars which is more enjoyable and exciting, and they're compromising with the safety? Is it so?
No, they are not compromising, I believe, because they have used the word while ensuring the safety of its drivers.
Yeah, which means they are doing, they're ensuring the safety as well, right?
Yeah. So primary safety on the top, we are making it a little bit enjoyable, more trendy. So what is enjoyable? Maybe, it will go fast as ICE cars, in the start side will be good. The design will be really good. The seats will be comfortable.
And the infotainment will be in a better way.
Yes. Whatever the other companies are doing, we can do a benchmark, or we may be one step ahead of them as well. So the company launched its first EV in 2012, almost 13 years back. This was an all-electric vehicle that offered a range of 219 kilometers. Cewmlator was one of the first manufacturers to sell EVs, and the company quickly established a market niche. So we were one of the first. Again, this highlights that we are constantly taking risks. We are constantly innovating. We are constantly trying new things. So usually, if the scenario comes in, we don't know what is the risk appetite. But in this pre-scene, they have given so much hint that company is taking a lot of risk. Despite being well-established company, we are constantly taking risk. I believe that is even required in this kind of industry. Consisting primarily of customers who wish to drive sustainable vehicles and did not require fossil fuels. So sustainable vehicles, environmental friendly customers, everything is just going up. This market will grow. So if the market is growing, the industry is growing, and we are already a leader. So this is a good point to increase our market share, or increase the number of clients. In 2020, Cewmlator had phased out ICE cars. This was recently, just 5 years back, replacing them with EV models that are designed to be the best in the respective classes in terms of range, performance, and value for money. Sometimes what happened, we have taken this extreme decision maybe just because we have got a new board of directors, and the way they want to run the company is totally different. So if we quickly go there, we'll discuss in detail later, but now I just want to see the numbers when we got a new leadership. So we have got the chair in 2023.
Operation director has joined in 2020.
23 only, CEO and everything. Only the operation director came in 2020.
Yeah.
Otherwise, if you see any other major change in 2020, finance director was 2019. Professor Anna, R&D 2021.
That's all in
So nothing much in 2020 happened actually.
right.
That means the previous directors, the board of directors have decided it. Now, if you go to the types of car, again, this is important to know how many types of cars we are doing, what is the market share of each, what's the revenue they are contributing, what is the cost. Usually, as we know in business, not all models will give us the same margin. Some models we are just running to give options to the client, so that it is not an easy entry point to our competitors. So we have Cewmlator Tiny. Tiny is a small BV design for urban commuting. It can carry 2 people and limited amount of luggage. Tiny's range between charges 143 kilometers. So this may be, an alternative to scooters also some places. Because why micromobility, this electric scooters and everything is going up? Because there was a research done by Harvard where it was saying that most of the rides, almost 60 to 70%, some number they gave, it is less than 10 miles. And around 80% of the time, there is one person driving it. So based on that, this car is targeting a similar user base. Usually an individual is going and they're just going to nearby. So therefore this range can be justified. Otherwise 143 kilometers is too low. I hope it can charge very fast because the range is less, so it should be rechargeable. But another problem we have seen in this industry is over time, the life of battery goes down, or the power of battery also goes down. Maybe 143 kilometers is the best when we sell it. Maybe in a 2 years time, the batteries come down to 133 or 123. That should not happen. Naturally also it can happen, but still we have to see enough controls are there. Or maybe we are replacing the batteries. I think we can provide a warranty and guarantee all of that things like this. Second is Cewmlator Trap. Trap is a small BEV that offers versatility without compromising on performance. So this is what style and design they're talking about. It has room for 5 people and a large boot, like a family car. The rear seat can fold down to create additional boot space. trap offer sporty performance on the open road and small enough to handle urban driving with ease. This is more like this should be one of our best sellers. And the range is how much? 254 kilometers. We are compromising on the range in a way because uh, they have mentioned somewhere that it is 600 kilometers. We can get a range of 600 kilometers as per the battery capacity today. But what we are giving is 143, 254. Do you think the life of battery is also compromising because of the other features we are giving in the car?
Maybe, yeah, because maybe
because
they are considering with the everything, all features and all. So they are not totally focusing on how much they are providing the kilometer mileage. I guess they are giving this number based on each like each features are turned on while driving and during the test, and then they are giving us if they turn it off every features of like music systems and all everything, then it may give us much more mileage. Maybe that may be the case.
Right.
yeah,
Right.
actually, add
Yeah,
on to point. So as actually you mentioned that the car we are making it just more enjoyable and exciting. So which means the CC is more. So that's something really stimulates us to drive very fast. So that definitely consume a lot of battery, and over a period it it will impact the battery as well. And the main and on top of it, they are saying there could be a possibility that infotainment and maybe the sound system they could have fixed it in the car. That also consume a lot of battery performances.
all right. And it's very difficult to reduce from that point. We have to give that all services.
Right. Competition.
Right. And if you can move on to the next one, if that Twist is a BV sport utility vehicle designed to suit the needs of typical family. Same thing, it can carry 5 adults in comfort. A very large boot, the folding rear seat enables the car to carry a large amount of cargo when required. Something like Tata Innova, if you see the bigger cars, that design it is. Range between 375 kilometers. So technically here it is the same thing for a bigger family, or maybe sporty means it's more faster, and obviously the cost will be higher. Then we have Scorch. Scorch is BV sports car. It has 2 seats and room in the boot for weekends worth of luggage. Scorch can accelerate from 0 to 100 per hour in just 3 seconds, 3.1. Scorch range between charges is 400 kilometers. So technically we are targeting different market. So the product placement is good because we are targeting almost all type of audience for car buyers, and obviously we might have a lot of data. We are doing this for like from almost 73 years. So maybe the same way we are selling the previous cars, the ICE engine, now we are doing it here. And I think one advantage we have over others is the amount of information and data we have gathered over the period. Maybe it was for ICE cars, but still we might know the demography, we might know the economic situation, we might know the infrastructure, how it changed. We might also know the government policies, how it has evolved, isn't it? Because when you are there for so many decades, you have seen the economic downturn, you have seen the economic boom, you have seen a lot of changes, right? So even if we just move here to the electric vehicles, all of that information we have gathered over time, or experience we have gathered, should give us a competitive edge, but subject to utilization of that. If the new board of directors is not respecting that, or we are not managing that or using that information properly, then it can be a problem. Right. Okay, so some more information. If you are thinking, any one of you are thinking how it can help you in the exam, why this is, do you need to remember it? You don't need to remember exactly what they are saying here. If you just have an overview, like we have two, like I mean 4 types of car, okay, what we are doing previously, so it should give an idea. Then based on that, you can create your own summary, maybe a shorter version of that. That is enough. You don't need to know like word by word what it was, where they mentioned. No, this is just for the understanding. All of Cewmlator's models are competitive within their market segments. For example, each model is in the top 3 when it's segment for range. So the range is less, but still we are into the top 3. Cewmlator has a reputation for a sound build quality and innovation. The reputation of quality is backed up by Cewmlator's warranty, which guarantees the car, including its battery, for 8 years or 160,000 kilometers. That's a very big commitment. Do you think 8 years is a very long time of commitment for these cars? Or this is what gives the guarantee for the buyer? Even if you take an ICE car, how much we are using normally? Especially the first buyers, they'll use for 8 years or 10 years. Usually in 5 years, 6 years, they might resell it.
Correct. I think 8 years is quite decent time for battery car.
Is it decent, or is it like we are over promising? Because it's naturally the power of battery will come down.
Like if you will see Tesla website, Tesla giving same 8 year for battery guarantee, and or else 120,000 miles. So it's like they are following the industry norm according to real life companies. I guess BYD is also giving similar type of 8 year or something.
Right. Possible, but we are giving an extra range.
See, maybe actually, Ms. Ba, correct me if my understanding is wrong. In the Indian system, generally cars can have 100%, 0% depreciation insurance till 5th year, right? So, which means the car is necessary. I think bare minimum it is really good condition till 5 years. So, additional 3 years is quite normal rate. What do we need to say? How we can say that it is 8 years is over commitment? Because 8 years after, as I said, the first buyers on an average they use minimum 8 years. There is no changes in that, but still 8 years is quite decent for the battery backup. I think battery cars, because even insurance also considering 5 years, we get a 0% depreciation.
Yeah, that point also you can consider. Yeah, so 8 years is not more. It is an industry standard, and only thing is maybe we are promising some more kilometers. But again, what you said for Tesla, Divesh, was it miles? If it was 120,000 miles, again, it's very similar here.
Yeah, I actually, even diesel cars recently, I got to know Toyota is giving 5 lakhs kilometers or something like that. 3 lakhs kilometers or 5 lakhs kilometers
For electric?
I think it is not for electric. It's
Not
a
for
diesel.
electric. 5,500,000 is like, I don't think so.
But no, it is not for electric. It's for diesel. I'm generally saying. So that is very huge rate for diesel cars.
Yeah, I think they give 5,000 to 8,000 recharge cycles, they say. They talk in terms of recharge cycles.
Mhm.
Yeah, it's 8 year or 120,000 mile. So 120k. Yeah, 120k. Yeah, I just checked, and they are giving also basic vehicle 4 year or 60,000 mile. So yeah, warranty. So yeah, they are just giving warranty, not guarantee. So I guess they made repair or something. They don't say anything about battery as well as a guarantee. Just says warranty on their website.
Right. So we are doing almost the same. It is warranty with which guarantees the car, including the battery for 8 years. Okay, so this is not over promising. We're just following the industry standard. And what it includes, any manufacturing defects that arise while the warranty is active will be corrected at a Cewmlator's dealership free of charge. Now dealership becomes another stakeholder for us. Are we owning it completely, or is it like a franchisee model? Make sure to add this in the stakeholder list. Batteries are replaced under warranty if the car's range decreases by 20% or more within 8 years. We are doing only if it is 20%. What if it is 5, 10, 15? That can also be a reputational risk. But I hope we have done enough R&D to commit on this. The warranty cover on the battery is conditional on the car having been maintained and operated in accordance with the advice provided in the owner's handbook. Obviously, it should be subjective, so we have done the proper risk management. And also, we need to make sure when we are promising this, let's say 160,000 kilometers, this may be for Duxland, and Duxland infrastructure, roads and everything is top notch. But what if in other countries they have a lot of potholes and it is undeveloped country, so that can 100% affect it. Now almost every vehicle comes in several different versions. Each versions of trim offers its own variety of features and equipment. Each of Cewmlator's models can be purchased in 3 levels. First is base, technical, the cost leader. Cars are designed as cheap as possible, so unnecessary equipment, no unnecessary equipment. Some customers choose this level to trim to save money. Others do in order to reduce weight or extend range. Maybe students and all, they can target this. All basic cars come with fabric seats and thin carpets which are lighter. However, one thing we need to make sure, if it is just for the base, we are not compromising on the safety, because many times that can become an issue. And ideal for the short journeys. If you go in the lukes, the second one, cars have better quality, trim and additional features compared to base. These cars have satellite navigation system, trap and twist in luke trims, have superior folding rear seats that offer the choice between 3 passengers and no conditional boot space. 2 passengers and some additional boot space from one additional boot space. What else they have? Seat folded, almost the same thing.
Does the looks mean a luxury here in this
I think
case?
it's a mix. We are having 3 category: base, lukes. Lukes is medium, then we have grand
And
lukes. So
grand
grand lukes is-
luxury, yeah, grand day luxury, yeah.
So technically a cost leader product we have, and someone is like economic or medium, then we have a luxury one. Car offers a further step up in terms of trim and lukes cars. They have leather seats, thick carpet, superior ground system, sound system. Remember one thing, the supply chain is becoming complex, with everything what we are doing. And manufacturing car is one of the most difficult business, because we need, thousands and thousands of products which goes into that. And I believe most of that we have to outsource. For example, we are not the one making seats, isn't it? We might have outsourced and we are just assembling it. But again, to assemble and to do the quality check, then control the supplier and contracts, that becomes a very big headache. So in the stakeholder, add another option of this. We have number of suppliers. Battery suppliers you can say as a key player, but the other suppliers, they might not be key player. They will be in the category of high interest, low power. But still, we need them for our business, especially if we are following a just-in-time approach. I believe we are not using a push approach. What is push and pull? Push is when we have the the products ready, the inventory ready, and now we are doing marketing. We are selling it faster. And pull, on the other hand, is when we have demand, when we have a confirmation or almost confirmation, then only we are doing all the process, so that our money is not stuck up in the inventory. Especially in this business where a lot of finances is involved, following push model can be riskier. However, if you're going with pull, the biggest risk can be the suppliers, managing the supply chain. That we need to take care of. The car is marketed as a luxury model to offers a superb driving experience to customers, and obviously they have to pay premium for it. Now we have 6 factories, 2 in Duxland, 1 in each of 4 different countries as shown below. Now, having having factories in different countries, that will come with a lot of political risk. In fact, CIMA from last 1 year is testing a lot on political risk, and I believe this can be one of the same scenario. So we can discuss here in a little bit of detail. Firstly, okay, first we can see this and we can go to expected question. So factory location is Duxland, north and central. What we are doing? Twist cars, Scotch cars. Eastland we are doing batteries. Farland electric motors. Winland trap cars, and Gowland tiny cars. But for batteries we are depend only in one country, and for others we are going different countries. But where the assembling is happening, that we need to know. Plus now we have to manage the political risk and geopolitical situation of 4 different countries. So firstly, if you look at the risk, what is the major risk here and how we can mitigate? Let's say the first risk is political risk. That's obvious. Then second risk is what? Foreign exchange risk, currency fluctuations and all. Third risk can be what? Interest rate risk, because we might need continuous finance, and obviously we might be trying to raise locally. That's in Eastland, Farland. What else? To be honest, I believe at least one question in any of one variant should be coming from this topic, because here they can test on so many things.
So
And
generally,
with all of you to involve, whatever comes to your point, our sessions should be like a discussion. Everyone should give their point of view, what they think. Doesn't matter if it is right, wrong, makes sense. Even if it doesn't make complete sense, fine. We are here to learn. Yeah, sure.
maybe yeah, actually, Ms. Bhai, there may be questions also possible. If anything happens, any political challenges in Eastland, what will happen? Something like that, right? That's what you are trying to say. Because, as I rightly mentioned, many questions are possible out of this box. Right. Suddenly, if any Eastland is facing some challenges, our EV vehicles get into trouble. Right. That will impact our bottom line.
Right. No, majorly, what are the risks and how we can consider that? Or maybe it can also suggest us to change the strategy. For example, tomorrow Duxland government, assume Duxland is like US and we are like a Tesla. And tomorrow government says you have to come and do all this here, otherwise we'll charge you heavy tariffs, we'll charge you heavy taxes. What will do?
Yeah. All right. Same case for the Eastland as well. If they say something, the batteries are getting manufactured there only. If any issues are happening, our EV cars get impacted, right? All our EV cars.
So one of the points that is missing is there's nowhere it is defined that Duxland is a developed country and a politically stable country.
That's a good
I don't
point.
see trading it anywhere.
Usually in the introduction, if you see the previous pre-scene, they used to mention that we are a developed country, but they
Yeah.
have not a mention. But still, we are assuming they should be, but yeah, it's not clearly given.
No, actually, it is mentioned it's a developed country.
In the introduction,
Yeah, Duxland is a developed country that is active and well regulated stock exchange.
yes, they do.
Page 2.
Yeah, sorry, they have mentioned. Yes, in another one there is.
Oh, okay. It's mentioned in the first page.
Yeah, because even our, if they don't, our assumption should be correct, because if we see this much level of demand in the particular market, obviously it should be developed country. What else we need to consider here?
Cultural differences.
Currency issues, dealing with the multiple countries.
Currency risk, right?
Supply chain risk, like if something supplier delayed any delivery or anything, or like in our own production, like electric motors getting delayed, it would be our other part of assembly will disrupt it. So yeah, supply chain.
Cultural differences and technology development in each country.
Sorry.
Cultural differences and technological development in each country may differ. That could be one of a challenge.
And I think effective internal control and quality control for this specific factory should be their priority.
Legislation risk as well, like rules and regulations, because we are involved in many countries, and if any rules change, also I feel like the reporting, I don't think so we need to report. But if we have separated out our businesses, so we may need to file our every year for our accounts, like the based on the unit, I guess. So Maybe I'm wrong, but like, because in each country, if you have any plants or any business going on or production, you need to disclose how much money you are making, how much you are spending, and you need to, according to that, you will need to pay corporate tax or something. So maybe this is where we maybe have some risks. We need to know each and everything about IFRS and everything for each countries, maybe.
Right. So
Yeah,
technically,
also, Misbah,
yeah,
also there is an environmental risk. As you mentioned, the political risk is there, and since it is dealing with the multiple currency and country, currency risk is there, and economic risk also probably is there. And competitor,
if you have the
competitor risk.
data, how many or like how much sales if you're getting from these countries, Eastland, Farland, Vinland, and this Groveland, technically 5 countries we are managing, right? So if you're getting good amount of sales from there, it makes sense because always beneficial if you are closer to the customers, closer to the client.
Correct.
I think the company needs to have good um, legal and taxation knowledge as well. I mean, accountants and everyone, so that they don't get in trouble with transfer pricing issues, because they sell products from one factory to another. We don't know if they have like separate entities there, or is it just owned or controlled everything by them. I don't know, like that these kind of issues can be of importance.
Right. So as per our exercise, we need to come up with 50 risk. Okay. So make sure you are taking a lot of risk from here. At least 10 risk you'll get from here, and how to mitigate. Anything we can
I
discuss? Yeah, Gaurav.
I'm sorry. I just want to add on one thing, especially on the Eastland. Like we are manufacturing batteries from Eastland, right? And I think the CO2 emission while manufacturing batteries are the most. So there could be some kind of political or some kind of a pressure group, that can influence, because that is one of the most important areas we have to focus. If we don't have batteries, we can't do any cars.
Definitely. Yes,
Uh,
that's a good point. Or maybe we have chosen Eastland, just a guess again, because the regulations are not that strict.
could be possible. It's never it's not specified somewhere, so we could just assume like hopefully it's just sorted that way. Yeah,
And if we have to sort, how we will sort? We should have that answer also. If we have to
lobbying, I'll
correct
say, or if not lobbying, we can just sit with them and we can have a meeting. What do they want? How can we solve this? Or how can we improve our ESG strategy? I don't think we have any ESG strategy. We do have a CSR, I think, committee here, but we don't have any ESG committee or any initiative. I don't know about, like, so.
right. It's not very clear. Ideally
other
for a
biggest,
business, yeah, Ravi.
yeah, please proceed. Please proceed.
I'm saying ideally for our business, it makes sense if we have some of this in undeveloped countries where the regulations are not strict, so that the supply chain keeps on going, and that's what is happening across the industries. Whenever they want to do something which is a little bit environmentally not accepted, or even a health and safety risk is higher, they go for underdeveloped countries where the unemployment rate is higher. So government is very flexible, and they can save the cost also. They can mitigate the reputational risk. We don't know if the health and safety risk and other risk is being mitigated, and there may be ethical question also, but that's what companies are doing. That's how the real world is working.
Yeah. So the other point that I want to share is just what happened yesterday. So the China said the access to the rare earth elements is going to be restricted,
Right.
which means the magnets and all will not be available, which means the motors for the electric vehicles will be problem, right? So the this supply chain risk is the biggest thing, because 80% of the rare earth elements comes from China and Russia. So a war in the zone of the where the rare earth elements are available, and also the countries like China can have a very difficult impact on the companies.
Right. That's a good point. China is dominating rare earth metal. In fact, in the previous case study we have for Leother, there also we were depending on rare earth metal, and one country was having advantage, that's China. The similar situation comes in here. So, assuming we are not in China, we need to have some suppliers, some partnership, some exclusive agreement with the Chinese company. Then only it is possible. It's very difficult to replace China. And ideally, we can have our business also there because we have the highest demand, almost 65%. The highest penetration in the world is in China only for EVs. It was supposed to be US, but US is not even, closer to 20%. I think 12, 13%. So they have a country factor. This point also we need to consider. Then what is the relationship with the Duxland government and the Chinese government? That also can impact the business. Looking at the developed countries, usually they are business friendly. They have good relations internationally. Geopolitically also they are stable. Now all of Cewmlator's cars are powered by lithium batteries. So this is where like BYD, they are sodium ion batteries they have introduced. So this thing also we need to consider. Shall we depend on lithium? Otherwise, if you think logically, lithium batteries make the most sense. Why? Because these batteries are very powerful. They are light, easy to recharge. Obviously, if we go a little bit into the chemical aspect of this, all the materials we have available, lithium is the most superior. And it's not just like very close, but extremely superior compared to sodium ion and the other batteries. But the only problem is the sourcing of lithium. The company has major factory in Eastland that produces the batteries for all of its cars. Maybe one of the reason Eastland we have chosen because they have mining. So we need to understand that factor as well. Batteries for electric cars are large and heavy items that are designed and constructed to build into the car themselves. This is just basic, you don't need to remember. I'm just reading it through it. Each model of car requires own specific size and shape of battery. So specification is required. Sometimes if we try to over innovate, the risk will go up because batteries can get or catch fire very fast. Mining and transporting lithium for batteries is a significant source of emission associated with the manufacturing of EVs. So environmental risk is there in Eastland, and being a global player, I believe this is public information. So it can affect our share price also in the Duxland and our overall reputation. So we need to have a strict policy where we are investing in the environment or in sustainable things. Maybe as simple as we are, having a tree plantation. We are having a, alternate source of energy being used in our offices. Let's say wind and solar. Cewmlator's focus on BEVs means that batteries are large, making it major user of lithium and other metals used in the batteries. So environmental risk or environmental issues can be one of the questions. So when you're making stakeholder groups, make sure you add this environmental groups. You can add NGOs as one, then environmental groups separately. Why separately? Because these stakeholders have got a lot of power in the recent times, and they're very easy to influence, especially in the world of social media. If they put something, things can go viral very fast. In fact, there was a scenario in one of the mock we did in the previous case study was we want to consider them as a key stakeholder. Who is a key stakeholder? Somebody who has high power and high interest. And imagine if we keep them as a key stakeholder, which nobody will recommend unless it is forced to, because they will influence every decision. And at the end, we are for profit making company, isn't it? Our shareholders will definitely not like it. Our policies, our strategies, everything will get affected. So we need to think of an idea where we are not making them key stakeholder, not giving them high power, but at the same time, we are doing something to keep them satisfied. So one of the way we can do is fund them. For CSR, you have to give CSR money, right? So CSR money you can give to this NGOs and the organizations who are working for the environment in a way that can be reported in our sustainability as well. How it should not backfire us, like we are doing that to keep them silent, or uh, just to ignore what is the environmental impact of our business. That also we need to take care. We need to balance it.
So just on this, Misbah, like CSR generally are like voluntary. It's very like if you want to do it, you do it. Otherwise, you don't.
Right.
Otherwise, ESG is like bit compulsory. You measure it and show it to your stakeholders. Like you report that. It's very transparent, right? So would that be a question in the exam? Like, is it possible to have that kind of question? Like, why do we don't have ESG policy or ESG, you know, committee instead of we have a CSR committee?
I think it's possible. Yes. So
Uh,
technically, CSR also, if you see, like in India, it's mandatory, right? But in UK, it's not. So we have to consider UK scenario here.
That's what I'm talking about because I haven't heard anything about CSR here. So just on one thing here about this lithium battery in Eastland, the plant we have, it doesn't specify anything about automation. Like, is the factory automatic? How much manual intervention do we have? I'm not really sure how do we manufacture batteries. I have no clue. But it sounds like, or we can assume that it could be all automated. And if it's automated, then there could be another question about this cyber risk, because I remember reading a question, maybe past few exams, uh, where I think it was another mining company. I think it was before Glyotire we had, and there was a cyber attack which made you know our which disturbed the operation somewhere. I think,
Right. Right.
right. I'm not really sure what the question was, but that's
I got your point. Yeah.
would that be a question?
Yes. So technically, cybersecurity again, political risk, cyber risk, environmental risk. These three topics are constantly being tested, and especially the company of this size. Definitely, we must be one of the primary target for the cyber attackers.
Yeah. Yeah. Okay. Thank you.
We'll come to that point definitely. Now, particular care must be taken in designing and constructing electric cars because their bodies must be built around the batteries. Batteries cannot be removed from cars once they have been built. However, there has been some innovation. It says that you can remove the battery charge, but it was related to the small two wheelers, or we can say the scooters. But for the cars, we have not seen that because the battery is so massive. But if that is possible, it will make it very safe. And imagine people can have one extra battery. So one battery they can carry it. If they are going for a long drive or they are going from intercity, they can have other battery they can plug in. But again, uh, it looks very difficult as of now. Rechargeable batteries can provide very high currents, which can cause electric fires in the event of short circuit. So health and safety again becomes a very important thing. Remember, whatever is happening in the industry, that becomes an exam question. For example, previously we have a case study where we are managing warehouses. Okay, in warehouse, the biggest risk is health and safety. And out of three variants, two variants have question on health and safety risk. And the third one was also there, but indirectly. And again, in the next exam after 3 months, they have health and safety questions. So the best and the smartest way to look what topics can be tested is look at the industry. Okay, so the pre-scene analysis start. And I strongly recommend all of you to spend some time. At least you can just go on Google and research, or just go on electric cars, type electric cars and go to the news section and see what news is coming up daily. Maybe something just happened 2 months back can become an exam scenario. Yeah, Nitish.
As you said about the new health and safety thing, so I remember for for Ola, I think their bikes or scooters started getting on fire
Right.
because of the battery issues and all, and they had so much of bad reputation, and even it still stays to the day that whenever someone says Ola scooters, so people related to being caught on fire. And I think same thing happened with the Tata Nano as well, back in 2000s when they had this, when they launched it, and many of the cars got on fire. So we can expect something like this with, specifically with this as well. You know, like, it's always when there's more and more of some product, then people start buying it, and then eventually people start seeing the problems as well. So maybe, I mean, it's obviously it's a good market share already, but I think it's growing more and more. And I think as soon as they capture more than 50% or like 80% of the market, then they have to be ready for this kind of problems coming in, because they already know it's a
It's
big
an
hazard.
industry risk. It's not specific. Yes.
Yeah, I mean, for them, it's not just the company, but if one company is ready, then only, it's the trend shifts from one company to another, and it goes to the lower market share companies as well.
Right. So a couple of points you have said first, like Ola scooters. So in scooters, that risk is higher. I think it's very rare we have seen news that is happening with the car. So maybe the batteries used in the cars are more safer, or they have designed in such a way because we have more space. So maybe therefore the risk is lower. But again, if it happens with the scooter, people can be sometime little confused whether they should go for the cars as well. So that health
Mhm.
and safety. Another health and safety I was saying also for our own employees, because this short circuit can happen during the assembling as well.
Mhm.
And I believe it is happening a lot of times, but the news doesn't come out. If you go and search specific, you know, in EV factories or battery manufacturers health and safety, you'll definitely get certain news articles, because usually media is also not showing up. They might be partner with the companies. In fact, nowadays what happened, the big companies like we have Amazon, now we have Adani Group in India, and there are some big players. They are controlling media. They have their own media houses. That can be again ethical question. So partnership with the media, maybe a partnership is still good, but if you acquire it completely, that can be a problem. However, when you're writing in the exam, we should be very strict with ethics. We cannot give a suggestion which may be a real that is happening, but when you're writing, you should be like very clear, white and black like that. Don't go into the gray area. For example, there was a scenario with the cybersecurity. I have a gentleman joining from London. He is running a very big business. He's a businessman. So a question came for cyber attack, and the person was asking for ransom. And the amount was, they have given the amount, it was just like few percentage, single digit compared to how much investment we need. So he just went forward and recommended, okay, pay the ransom. Because he said that is happening. I've seen with so many companies. It happened with Google, it happened with Uber, and a lot of other companies. And he obviously didn't get marks in that. He failed by few marks. Then the next exam, ironically, he got the same question. This time was like, even if it is for a very small amount, we are not doing it because it's unethical, and in fact illegal in many places to pay for the ransom. So we have to be practical, but when it comes to ethics, when it comes to law, we have to be very strict with our answers. Okay. Moving on, Cewmlator's cars are sold through a worldwide network of 4,600 dealership. So mostly these dealers we are not owning. They must be like a franchise setup. So there might be a conflict with them. How to manage? Just add them on the stakeholder list. These are independent businesses that are authorized to sell and maintain Cewmlator cars. Now we have to see whether they are doing exclusive or they are doing for other brands, or how many of them are exclusive, how many of them are doing with the competitors, what is the percentage of the revenue shares. Usually nowadays there is another trend, especially in developed countries. You will see the dealers, they are no more selling new cars, they sell used cars also. And if you dig in deep why they are doing it, because the margin is higher when they sell the used car, because in the new car there is so much of compliance, they don't get much. But when it's used car, they can just mark up, they can give their own personal guarantee for repairs and everything, and they can enjoy heavy margins. They can negotiate when they are buying in, they are more control. But obviously it can impact the buyer when they go to a dealership, They have the option of new and the old one itself. And they will be definitely biased. They'll try to push if somebody is struggling for the loan or the credit, they'll say, okay, you can go for the used car. That's the industry level issue. Okay, each dealership receives an allocation of cars and must maintain a satisfactory performance in terms of sales and customer feedback. And they are the one who is taking care of the warranty what we provide. So we need to make sure that we are training, constant training for them. If you're launching a new battery, new car, we need to update them. We need to train them. All of these things should come up. Each dealership provides a showroom that has space to enable customers to see the cars that they are interested in. The car must, so it's very traditional normally. The dealership must also have a space to accommodate demonstrate cars that are available for customers test drives under the supervision of sales staff. I believe we are very good in it. Why? Because we are doing this with the ICE cars previously. A team of sales advisors who can assist customers in choosing a car from the Cewmlator range, a workshop that has the necessary equipment and staff to maintain and repair Cewmlator cars. What else? There are some things that are missing. Missing two stakeholders they have not mentioned. What are they? First is credit providers. You need to have tie-up with the banks. Most of the buyers will be doing with a loan or credit. Right? What else is missing? Another important stakeholder here. Stakeholder management is very important. Sometime in exam, they'll give you a direct scenario and say who are the major stakeholders getting impact. So one is credit provider. What's the another one we are missing? Is the insurance company.
The government, so for example, in Dubai, if you want to buy the car, you have to do the registration process, like RTA, such a kind of government department.
Right. So in certain places, government regulations, or you can have extra compliance. Again, that will be there. But insurance companies play a very, very important role here. So I am looking here with two business opportunities. I'll definitely need your thoughts on that. First, can we have our own insurance company? Can we have our own captive insurance company? Because insurance is mandatory in most of the countries when they're driving car. So why to pay that heavy premiums? And if we can do that at the dealership itself, the dealership also will be happy and we also will get a business. Second thing is about the financing. We are such a massive company now. We have so much of billions of revenue coming in. So why can't we have our own small financial institution? Why can't we lend money also instead of going up with the bank? Or maybe why can't we acquire a small bank and go into this business?
Actually, Tata is doing that, right?
Tata Capital is there. Yes.
Yeah, Tata Capital is there. Tata Insurance is there. AG Insurance. They're doing both.
Right. So what do you think? How it will affect our business? What are the advantage and disadvantage if we do that?
The advantages if we have our own capital and AAG kind of insurance stuff, maybe expanding the business, more investment is required. But of course, in the long term, definitely will gain. I think it will impact our improvise our top line growth generally, because we generate more money by providing loan, and also we get more additional commission by providing insurance on ourselves instead of going for the third party vendor or something like that. We try to gain the margin additional. For that, we should have enough of capital for both.
Right.
I'm sorry, I would like to add, why don't we start reaching on the top of the market instead of, having a financial institution by ourselves? We should invest that money into our more R&D so we can get more market share or be on the top.
Sorry, Gaurav, can you just elaborate a little bit?
What I'm trying to say is, instead of acquiring a bank or being a financial institution or setting up another financial institution to give loans to the customers, why don't we invest that money or whatever the extra surplus we have or reserves we have to put it into more R&D so we can be the top in the market, like Alton or whatever the name was. you know, we can get more
Yeah,
market share.
sticking to the core competencies rather than
Sorry.
diversifying.
Yeah, core competencies. That's what I mean. Yeah.
I got the point. Yeah, that is also a good idea. This is just a point. So you can suggest we should go on the core, and someone will think, okay, we can do that.
Just Misbah, I forgot to ask you one point. We just left at about. So we are in a niche market. I think we operate under a niche condition. So I might be running a bit ahead, but we have under this portal generic strategy. We have three different costing models. Like we have cost leadership, and we have niche, and we have one more. I don't know what you call it.
Focus.
Yeah.
Yeah.
So focus is niche, and then we have cost leadership, and then we have sorry,
Differentiator.
differentiator. So where do we fall? We fall in niche.
So
Or
yeah, technically, basically there are two: cost leader and differentiation. And if you're focusing on too much cost leader, that becomes a niche. Or if you're focusing too much on differentiator, that also becomes a niche. So from this, I don't think we are in any niche. We are into cost leader and differentiator. In differentiator, we have two models. In cost leader, we have two models.
okay.
Actually, niche will be very specific. Let's say we start electric vehicle for car racing, like
Yeah.
F1. So that will become a niche. Or we launch a very luxury car, something which is like a competitor to Rolls Royce, Ferrari. That will become a niche.
But we do have a sports car.
We do have sports car, but now I think almost every major company is doing a sports car, so-called sports car. If
Okay.
you are actually making a car which is good enough to compete, that becomes a niche.
Okay.
Now, I
Okay.
think even any basic car models, they are coming with some sporty version of that.
Okay. Okay. That's all. Thank you.
I hope it's clear. Niche is something very specific. Very specific.
Yeah. Okay. 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 Thanks.
Yeah, you're welcome. Others, what's your point on this about insurance and banks? And especially, I want to ask this to Mega and Pallavi. Both of you are very silent. Nisa also. Our session should be of discussion here, because if I have to just talk, I can give you recordings. And if you don't understand, or if you have a total different point of view what others are saying, please. And I also expect that you have read the pre-scene before, so at least once. So you should have a point of view. Pallavi, Nisa and Megha, can you guys hear me? If you're out, you can put in the chat box also. Okay. Without you putting in the chat box. Yeah, Pallavi.
Yes.
Hello.
Can you hear?
Yes, I can hear.
Yeah. I will put in the chat box, okay?
All right, no problem. So, we have to take the decision whether we focus on core or do this. But my personal view is, obviously, you guys can have you can have your own view. I personally believe this is the best opportunity. Why? Because investing in core competency is good, and we have already done it, and we have already reached to the saturation. And if we do this and diversify our source of revenue, it's easy money, less risky money for our business. Why? Because we have a very big brand in the market. Maybe we'll not acquire the entire bank, but at least we can be partnering or strategic alliance with some of the bank, and we have already created so much of trust. And rather than going to the other companies for loan, why don't we help them? And remember, in this business, we have very high margin and the risk is very low. We don't have health and safety, we don't have environment, we don't have, maybe we might have a little bit of regulatory risk, but apart from that, this is almost risk averse, right? Because we have companies who do credit ratings and everything is sorted. Then same thing with the insurance companies have margin up to 70%. If you see most of the Fortune 500 companies, they have their own insurance companies, captive insurance company. So why we are wasting money or why we are losing the opportunity? Why can't we have our own insurance company and ask them to do with us? So once they are going to dealership, they are not only looking at the cars, but they are getting insurance support, they are getting financing support, they are getting after sales support. Everything we are covering. So we are having two good source of revenue, which is very profitable and less risky. And I don't think it will affect our reputation also in a bad way. In fact, it will be a better way, our reputation. Think as a customer, if I'm going to buy, if you're going to buy, you have to go to any other credit provider, isn't it? Any other insurance company. If you're giving the same price, or maybe we can even give some discounts. Why not? Because they are trying to do everything from us. We can bundle up. Especially insurance, that is a very profitable thing. For now, we are not clear if we are doing it on our own. So you can just put this as a stakeholder, which is connected to us because they are not internal. Okay. For now, we need to maintain a good relationship with them. Now going to our.
I just had a question. Would like insurance and after sales service have some sort of a clash? For example, now if the bike breaks down, the car breaks down. Sorry, I just read about the Ola Electric, Nitish gave that example. People have given their bikes for the servicing, and for 6 months, 1 year, the bikes are just lying there, with Ola Electric. They have not given the proper after sales service. So, suppose we are not giving the proper after sales service, then we have to pay them the insurance money, right? So, there can be something like that. But I think in our company, Cewmlator, we are giving them the proper warranty and after sales service. So I think it can be profitable for us to have the insurance as well.
Right, we have a dealership, and insurance is not for after sales service. Insurance is, we are focusing, it's a legal requirement. You need to have third party liability, all of that. Then insurance we need for our own employees working in the warehouse, then our business insurance. So many insurance we need in the business. And what we are trying to sell is mostly the legal compliance, the third party, the liability insurance.
Okay. Thank you.
And after sales, if we are promising and not doing, obviously we can have legal risk, litigation will lead to financial risk. But I believe we are doing it. And
yes,
Ola, if you go outside this and take Ola example, why Ola is not doing? Because they are doing everything organically, and they are into the Indian market where the infrastructure is not set up. So they are in a dilemma, like they should develop their business or develop the infrastructure. And users are not sophisticated. So there are so many other problems they are facing. But for us, we are already well reputed. Imagine Ola was started by, let's say, a company like Tata, where they have so much of brand value, so much of infrastructure. They already have their other vehicles, or let's say Mahindra or these top companies. Then it would have been totally different.
Yeah.
They already have their traditional dealership or service center where they just have to start doing for these electric vehicles.
Yeah.
Okay, now moving on to our mission, vision, values, the annual report and everything. So how it helps? Okay, why we need to know the mission, vision? Sometimes a scenario comes up of, evaluate a project or evaluate the proposal. So we try to answer that using SAF model, suitability, acceptability, feasibility. So when we talk about suitability, we should know whether it is suitable for us in this point of time. Let's say a company is going in loss and we want to acquire another business, not suitable. Another important thing about suitability is our mission and vision. We don't want to get carried away to a different thing, or we don't want to do something just because it's profitable, right? So mission is all about why we exist. Sometimes mission is directly telling what our business is. Sometimes it is generalized. But why we exist? We cannot say we are here to make profit for shareholders, to give return to the shareholders. Okay, that other business is also doing. How you are different? What you are doing? Why you are doing? Okay. sometimes students get confused. Our mission says something and now we are diversifying. Let's say we are going into insurance. Do we need to change our mission or vision? No. It's not any legal requirement. You're not mandated to do everything what you have mentioned in your mission and vision. However, usually companies, when they diversify, when they become a conglomerate, they usually change because they want to give a better understanding of the business. So if you see our mission, Cewmlator's mission is to make the world better place by providing desirable and sustainable motor vehicles. So our mission is very specific and exactly what we are doing. To be honest, one thing I am looking at in our business model is why we are not doing scooters, because still scooters have a very big market. Because even if our mission is saying sustainable motor vehicle, so where it says just we should do for the cars, why we are not doing scooters? Because we have underdeveloped markets where the demand is there more for scooters rather than the cars because of the cost, the infrastructure, even the roads infrastructure and everything is a problem. But if you go for scooters, that becomes a major challenge. And the best part is we are having good financial resources. We are a listed company. We can acquire an established business. What do you think about it? Okay, so make a list.
Actually,
Yeah, sure.
yeah, actually, there is a concept called, higher unit of sold, lesser profit, something like that. So maybe our company in such a way that, by investing huge, making a product at a high level cost. For example, instead of scooter, we making car. Instead of selling the 10 scooter and making 1 lakh dollar, instead of we can sell 2 cars and make $1 lakh.
Yeah, you are saying the margins are low.
Yeah, margins are low and the efforts are very less.
Yes, yes. So that's the risk. Okay. So one assignment you guys have to do, again, you can add to that risk stakeholder is find out what are the ways we can diversify our revenue. Like insurance, banks we have discussed now, we can go into electric scooters. Then can we do it something for the warehousing where there a lot of automation is happening? They need a lot of battery there as well. They're having cobots and everything. That will be a little bit diversification, maybe outside industry, but just make a list. Okay, at least 5 to 6, or maybe I think if we are a little flexible, we can get up to 10 options also. What are the ways we can diversify our revenue? Because one downside of the business is we are here more than 7 decades, but we are not yet a conglomerate. What is a conglomerate? When one business is into different industries. If you see any big group globally, almost most of them have diversified. Nobody want to stay in one industry. If you look at major players in India, we have Tata's, we have Reliance, we have Adani Group. Globally also, if you see, like Amazon is into the satellite business also. Amazon is into resellers. They're selling used products. Amazon is a financial service. Also, they are coming up. So why Cewmlator is only in one industry? Don't you think that is an opportunity lost? We have finances, we have brand value, we have connections, and we have a brand reputation not only in our country but in multiple countries. So usually how the trajectory works, a startup, let's say in the first 5 years, if they are successful, they'll grow big, and around 15 years they get listed. And once they get listed and become comfortable in one industry, they have got a decent market share, a good market share. Then again, 20-25 years into the business, they will start diversifying. And once the diversification start, usually that is through acquisition, because we have finances now. We can raise it through stock market. And every 5 years or sometime, the company is going into different industry. Isn't it? So that also looks a little bit different for us. Even Tesla, if you are looking at now, they are also into different industry. Okay, so this point also we can add. Then our vision. What is vision? Vision is technically our long-term aspiration, or we can say medium to long-term aspiration. Once that vision is achieved, we'll have a new vision. For example, our vision is to get the highest market share in the world. Okay, we got it. We become number one. From number 3, we have become number 1. Now what after that? So we'll go to the next week. Or sometime it can be again generalized. Like here, Cewmlator vision is to be the leading manufacturer of sustainable motor vehicles. If you see, in a way, we are one of the leading. But if you want to be a specific leading manufacturer, you want to be number 1. Another thing we can understand from our mission and vision is what is our approach, what is our risk appetite. Because when you use the word leading, can you think a company want to become a leader without taking extra risk, without taking a lot of risk? Is it possible? And this is not for Duxland, this is for global. It's impossible, right? So it gives a clear indication that company has taken a lot of risk and we are ready to take risk. And that means when you want to become a leading manufacturer, you need to have everything that is top. We need to have the top human resource. So hiring of the people, retaining of the people, their remuneration, everything should be better than the industry. Right? Then if you want to be a leader, you need to have a very good supplier. If we get below par or basic supplier, obviously our quality will be compromised. So what companies are trying to do nowadays is controlling the supply chain, or trying to do a lot of things in-house. But again, that will become a different challenge. So when you want to become a leader, you have to have more and more control from start to the end, and in our case, after sales service also.
I'm sorry, Vesba, I just want to clarify one thing. To take more risk, would shareholders be able to rely on the current board because everyone is new? So would that be a right thing for shareholders to do that?
Right. So when it comes to risk, if we are taking extraordinary risk, that time we need to have a consent from majority of the shareholders, or at least major shareholders. And other aspect of that is, as a shareholder, they will understand if they're buying stocks, they will know how risky the industry is. For example, later on, they have given our beta, which is around less than 6.6. So compared to our competitors, we are less risky, but overall the industry by default is risky. So shareholders will have an understanding with that. And on the top of that, we have risk committee. We'll see in the next page.
Yeah. Okay.
To
Okay.
evaluate. And we have NEDs. So what is the role of NEDs here? Non-executive directors are not looking for not looking for other stakeholders and everything. Their primary concern is only shareholders. So that way, shareholders are informed. They are powerful enough to influence the strategy.
Okay. Okay.
The only thing is we need to justify the returns. If somebody is taking a risk, they will see what returns they are getting.
Okay, fair enough. Thank you.
Welcome. Now our values. If you look at our values, so what is values first? Values is something which we should never compromise. Usually when companies in difficult time, let's say companies going through a very bad patch, or we have got a litigation, we have got a major reputational issue. Let's say our CEO resign in the middle, or CEO join our competitors. Let's say our chair or any of the board of director was caught in some kind of fraud. Anything can happen, you know. So it's very tempting for us to compromise on our values, maybe just to survive. But that time also we need to be very strict. Just for the profit, just for the short-term thing. No, we should never compromise. This is values for ourselves, our own employees and our team first, then to our stakeholders. And we should show in our action that we actually believe in our values. Okay, so the first thing is Cewmlator is constantly innovating. This might be painful to constantly innovate. A lot of money goes into that. And being an industry leader, you might not get a lot of support from other players. Maybe the government and others also, we don't get much support. So we have to still continue it. Then Cewmlator is committed to enhancing sustainability. This is a very strong commitment we are doing. Now, if anything happens with the batteries, in a different country, then after sales service, recycling, everywhere we need to show our commitment for sustainability. Because what we are promising is very big problem. Then Cewmlator offers the highest quality in its product. Now, how we justify highest quality? One way of judging quality is with the price. People usually think, okay, I'm paying this much, what I'm getting in return. That's a perceived value. Or highest quality, maybe the industry standards are better than the industry standard. Or highest quality, maybe in the utility of the vehicle. And for highest quality, again, we need to have more control on the supply chain. Then we need to invest in our human resource, because in this business, human resource can be very important asset. Because usually for basic skills we can get people, but anything specific, we might need scientists also. We might need very experienced engineers. So we need to have a policy how we can hire them, retain them, and keep them satisfied, and maybe involve them in decision. That depends on the leadership style. Then Cewmlator pays attention to the needs and desire of its customer. What are the current needs? What are the changing needs? Let's say we are getting new university students. They are looking for speed. They are looking for style. Maybe they are not looking for the mileage much. Or maybe tomorrow we start making trucks. We want to diversify. We are just into the cars. If you don't want to come into the bikes or scooters, why don't we go into the trucks or your small mini trucks? That can be another strategy. So again, for that we need to see what is the desire for the customers. Technically, we are flexible enough to change as per the customer desire. Maybe that's the reason we move from ICE engines to electric. Right? So this is something we cannot compromise. Any questions on this? These are some points that have been written you just to think, but you should be adding some points from your points also. And how you can get the points if you know the industry, or we can compare these values to our competitors, what they are doing. And I believe the real world competitors might be having a similar values, because even if you see CIMA pre-CINO, this is usually a replica of a real world company. Around 60-70% they are just taking from some companies. They're doing some changes and coming up with the pre-CINO. Because if they give something which is not relevant to the industry, it will not make sense. Any question?
No.
All right. Next is board of directors. This is very important. And for this, we need to have a little bit idea about corporate governance, UK corporate governance. Okay. So I request you, if you can spend 30 minutes and go through that chapter 5 of corporate governance. I have given the recordings, or you can just at least read that. So when we discuss this tomorrow, it will make more sense. For example, in the UK corporate governance, it says that you should have 50% NEDs other than the chair. But if you look here, for example, if you just do count, we'll do it in detail tomorrow, but just to start with, that's the chair. Suran is the chair. Now, if you look at, we have a CEO, operations director, research director, we have finance director, sales. How many is 5, right? And how many NEDs we have? 1, Professor Salam, Professor Uzma, 2, 3.
4,
That's it.
I think.
We have 3, right?
Yeah. Excluding chair, because
So 3:5. That ratio is not according to the best case. Yes. As we just there's some echo coming. Okay. And we discussed.
No idea.
Another thing is about the cybersecurity, like Gaurav pointed out. That's an important question. But our cybersecurity may be not very effective, or at least it doesn't look very effective because we don't have an ID director. I was expecting to have an ID director at the board at this level. We are so much into technology and we don't have anybody who is leading from the front. So that might also look like a challenge. Okay. So when we are doing SWOT analysis, we will do for the overall our business, plus we have to do it for the board of directors, because that will make a difference. Okay. Usually one question can come from board of directors, maybe directly from here, or they will link it to the committees, especially audit committee is very commonly tested. All right. And there are other points also. We need people from finance background in the audit committee. The chair should not be there in the audit committee. Like Suren is sitting here, that person should not be part of the audit committee as a chair. Okay. So we'll discuss all of this tomorrow. I request you to read this once, maybe entire pre-sheet, not just the board of directors, and go through that chapter 5. So that will make our discussion even better. So tomorrow we'll discuss this. Then if we get time, we'll do the financials also. Otherwise, we can do a separate session for financials. Tomorrow we can do board of directors and the news articles. News articles are also very important. Okay. Any questions?
No, thank you.
You have
Thanks.
access to the resources of pre-seen, industry, financials. Make sure you have a go through it once, so it will be easier for you to understand and for discussion. So what we'll do, we'll discuss what they are given. At the same time, we'll also try to understand what type of question can come from there. Then what can be our response. So in a way, we are looking like creating a mock and coming up with the answers. So that will be an ideal situation.
Thank you.
Thank you everyone for joining.